What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but the charting method and the trading method that we use can be implemented with any company that's publicly traded in the U.S. stock market. So make sure you hit that like button if you enjoyed this video. Big thanks to those who continue to tune in. Give us the thumbs up. Leaving comments on the videos, it really helps the channel grow, and we're glad to see you guys here over and over. If you haven't already, make sure you hit that subscribe and notification button as well. That way you are alerted to when we release new videos. We do release bonus content from time to time. Now the nightly and weekend videos, like tonight's video, focus on identifying triggers and targets for trades ranging from scalps and intraday trades to long-term swings and leaps. So if you do want a deeper dive into exactly how we set up our charts, broadening formations, levels of support, resistance, things of that nature, make sure you check out the bonus content on our YouTube page. Got a couple of videos that dive deeper into that for you. And lastly, if you want a quick reference guide for the STRAT, which is the base of our charting and trading method, there's a link to a free PDF quick reference guide for you there in the description of this video. So I encourage you to watch the full video. We do go over triggers and targets for short-term time frames, but we talk about all time frames and give some good insight on all time frames. So let's go ahead and check out the agenda for today's video. We'll go ahead and recap to the price action for Thursday, January 29th, and then we'll zoom out like we always do to look at the week, month, quarter, and year price action. We will then take a look at the market maker's expected move for Friday, January 30th, before we zoom back in and set our 4-hour markers and triggers and targets for Friday, January 30th, along with a quick review of the triggers and targets for the week, month, quarter, and year. All right. So let's go ahead and go to the charts, starting off with the 5-minute like we always do. This just shows how we can take advantage of the proven and repeatable strategy that we use. The strategy is looking for higher lows at or above the opening print or the opening trading price of the day. If we get higher lows at or above that opening print, we look to get into calls, targeting overnight high and previous high a day. Whichever one comes first is the first target. Whichever one comes second is the second target. On the other side of the coin, if we get a lower high at or below opening print, then we want to look to get into puts, targeting overnight low and previous low a day. Whichever one comes first, obviously, is the first target. Whichever one comes second is the second target. So higher lows at or above opening print calls, lower highs at or below opening print puts. Right. So here we have today's price action. Oops, I've got a little bit of Wednesday on there as well, but we can see we opened here at 70.39. We've got overnight high up here at the top of the top of the page, previous high a day right here, previous low a day, and then we've got where's our overnight low? Oh, overnight low is up here as well. Looks a little bit small just because of how much range we had intraday today. So we opened here, got a little push up, closed that first 5-minute candle as almost an inverted hammer. Second candle went 2 down, but if we look in comparison to the last down, the last down on Wednesday, we can see we're just slightly above. So higher low here. Once we break above this, the high of this 2 down candle, that would be your trigger to get into calls, and that's actually what we did early on. Again, it was the same type of situation as yesterday, where we're opening right here by this daily broadening formation. So initially, well, and a fib extension as well. Excuse me. So initially, went kind of light, and ended up being glad, right? Because we ended up going below the low of that candle. That went to lock this in as a higher low. Once we went below that candle, that's the time to get out, right? That's the risk to reward that we have. The risk is going below what it was, that higher low, and our reward is overnight high, because previous high a day is already, we're already there. Obviously, once we get to overnight high, if we've got momentum, we continue going on. We've got our notes for it, the markers, targets for the 4-hour and 1-day chart and things of that nature. So it does go past that. We don't need to stop at overnight high, but that is the initial the target for that move. So with that, once we went below this candle, we stopped out, and we were pretty glad, because at that point the bottom fell out. While this candle was taking place, we saw what was kind of going on here, and went ahead and lined up some puts as well, in case we needed to get out of these calls and go in the other direction. And that's ended up happening here. We got in a little bit later than exactly when we triggered down. It was more around this fib, slightly below there, but you know, hey, it didn't really matter at that point. We did get in, and the reason why we got in is because that made a lower high, right? So there's a first high on the 5 minute, higher low, but then lower high. And again, we're right at opening print level. So remember, the rule is at or below opening print to get into puts. Well, this is at opening print. It's just about as at as you can get, right? So that's why we got in there. Again, didn't get in too heavy, just looking at previous price action over the past few days, right? So, you know, just taking our own warning that we've been giving over the last couple of days. You know, we didn't enter too heavy, but once we did get this lower high within, now we've talked about this before. The top of gaps can be bounce points intraday, where sometimes we come down to them and bounce off of them. But once we go into them, they can be, you know, a rejection point, right? It's just like turning support into resistance, and that's what we got. So we pushed down into the gap, didn't quite close the gap, came back up, couldn't get out of the gap, right? We rejected here and got this 3, 2 up, 2 down for the lower high on the 5 minute. As soon as we broke below this failed 2 up, we went ahead and added to our position, and went ahead and took it on down. You know, there wasn't a whole lot to be said or done at that point. If we look at internals, that's another thing I'll talk about. Internals took a nosedive as well, which was another reason why we're fine with adding to that put position, right? So if you look at the tick, right, it's below the zero line all morning. Yeah, it popped up a little bit, dropped back below, went up a little bit midday, but you know, at or below zero line a lot of the day. Vol QD never got above zero line, not even maybe just a little bit at open, but then it just plunged, and we got to trend lower zone by 10 a.m. You know, and stayed in trend lower zone, and you know, deep into trend lower zone by the end of the day. Same with breadth. ADQD started above zero line, but quickly went below, found a lower high here, or rejected off the zero line, however you want to look at it, and went to the trend lower zone, stayed down there all day. Now breadth did start to come back towards the end of the day, and you saw that in price. But overall, you know, that's why we were you know, emboldened, if you will, to add to our puts at that particular time. When we were in the gap, right? So once we came back down, excuse me, we hit that 50% retracement of the, you know, the latest pullback that we had. And if you're familiar with the channel, we I don't want to take too far to, let's just do it right here so everybody can see it. All right. And so if we look, oops, come on now. We had this run up, run up, run up. I'm sorry, run up, pullback, run up, pullback, run up, pullback, run up, pullback. Well, this was the last pullback that we had, and we drew our fibs here, and those are the fib extensions, right? But anyways, we came down to that 50 fib line. Let's get back to the 5 minute. There we go. We came back down to that 50 fib and to this next gap. And again, we've talked about how gaps can be bounce points, and that's exactly what happened. A lot of times, like we've said, it may only last intraday, right? The next day we may just come back and fill the gap, but intraday we did get a bounce off of the top of that gap. So we let go of a majority of our position at this point. That was a pretty big dip that we had taken. It was very fast, and a lot of times, especially with SOXL, if you get that fast drop, not a you know, lingering, you know, drawn out pullback. If you get that quick pullback, a lot of times that reaction back to the upside is pretty quick as well. So we didn't want to be you know, didn't want to give up too much profit at that point. So we exited most of the position, and you can see that first candle to really put us back in was pretty violent. This is just a 5 minute candle, and went from, you know, 63.15 up to 65.11. $2 in 5 minutes for SOXL. So, you know, that's why we went ahead, took some profit there. Once we got the higher low here, we went ahead and took profit, right? So here's that 2 down. We thought we may, you know, reject off of the bottom of what was the gap. It had been filled at that point. But when we didn't get that push down and we got the next push up, we went ahead and exited the position there. What we did is just took a risk play. This has nothing to do with our strategy at this point. Just looking at where we were in, you know, the overall scheme of things. You know, we threw a couple calls out here. probably got a little bit lucky. Again, there was nothing structurally that should have said, you need to take this this call back to the upside. Actually, no, I think there was a 15-minute that gave us, emboldened us again. Oh yeah, no, that wasn't till noon. Let's go back to the 5-minute. Yeah, this was only 10:30 here. So okay, yeah, the higher low on the 15-minute is when we decided to stay in. That's what it was. So we took a bunch of risk here. It was just a guess play. I wouldn't suggest it if you're trying to stick to a plan, but we've had a very good week so far, and just looking at where we were in the grand scheme of things, the risk to reward was there. We were willing to let it drop back down a little bit more, and see if we got some, support off of somewhere around this area. Looking at this as like a wick on a higher time frame, get a bounce off of this area here. This is the 200 fib extension of the April bull flag, so that could have been a very good place to get a bounce if we did drop. We would have stayed in it, but below that area we probably would have went ahead and got out. But we got a little bit lucky here, and then got the higher low on the 15. Just went sideways through the afternoon, and then we did get that kind of a squeeze at the end of the day. We let go of the majority of the position. We only have one contract left here, swing, and let's see after. Oh, geez, yeah, kind of glad we only left one to swing. We're down a little over $1 in after hours. So, some pretty good volatility today. Able to get some profit in both directions. Obviously, more profit to the downside. So I hope everybody was able to take part in that. Let's go ahead and zoom out a little bit more. Let's take a look at the 1 hour. Let's go to our day chart. There we go. So we can see on the 1 hour, the trend is neutralized now, right? So if we go back to the 15, we basically got an uptrend, right? If we go to the 4 hour, yes, today was a big drop, but in the grand scheme of things, it could just be a higher low. We would have to come down here to, what's this, 59.50-ish area to make a lower low. And again, we're coming from a higher high, so even if we did make a lower low, we're looking at a broadening formation, at least initially, sideways action before there was some type of lower high to confirm the start of a downtrend or something like that. So again, even if we close this gap, came down here and made like a lower low, and then kind of push back up again, it wouldn't be the end of the world. We would just be making a broadening formation there. So on the 4 hour, 15-minute, 1 day, let's look at the 1 day, right? Could be a higher low here again. The week we're fine, but the 1 hour looks like it's going to be the key for us. That's what neutralized, right? We went higher high, but then went lower low. So now we've got this broadening formation situation on our hands. Let's get the right tools out here. All right, so there to there. Let's make it the right color. Oops, there we go. And then from there to there. All right, so here's our broadening formation, right? We've got the high, higher low, higher high, but then lower low coming from the higher high. So our broadening formation. Now we've got to see, we've made a higher low initially here with this 1, 2 down, 2 up reversal. But the question is, are we going to get the higher high? We could just as easily come up, make a lower high, and push back down, and then we're looking at sideways action. Or if we push back down, make that higher low, but then make another lower high and continue to push down. Now we're starting a downtrend on the 1 hour. So the 1 hour, I think, is the thing that we need to really focus on. If we open how we are now, it'll be decided for us, right? We're down pretty good in after hours. So that would be the lower high in that case. Let's see, what are we at? 69.27. So it wouldn't be a lower low, obviously, but at that point we'd have the lower high, and we're looking at bullish consolidation or just sideways action at that point. So keep your eye on the 1 hour. I think that's going to be the key. Let's take a look at the day chart real quick. Let's just go out to our wide. There we go. So we've got a 3 on the day, bullish engulfing candle, doji, hammerish doji, huge wick on the bottom, small wick on top. So I can't call that bearish. Neutral. So it's slightly bullish leaning if you're just looking at pure candle structure. I don't see how that can be bearish at all. I totally understand neutral if you've gone neutral, but we've got to exercise a little bit more patience before we can say no, we're going down further, or we're starting a downtrend, right? At the same time, we need to wait to see if we're going to go up further. It's just patience, the patience play right here. So I hope you've got time on your contracts. I hope they don't expire tomorrow. Unless you plan to play that, an overnight swing or something like that. I hope it's not something that you've, swung over weeks and taking it down to expiration. That's definitely not the way to play it. But, if we've got those, longer dated options, we still have February monthlies calls out there. Still plenty of very green at this time, even with the pullback today, they remained green. So there's no reason for us to sell those longer dated options, shares, or anything like that. You can sell calls if you want, but again, even then, I would think that's kind of risky because I don't know that we're gonna just go down yet. Again, we don't make predictions here. What we do is we set our triggers and targets on both sides of the equation, and we wait for one of them to trigger. Whatever side triggers, we go with it, right? That's especially from a shorter time frame perspective. We've made very clear what our stance is from a higher time frame perspective. We're in an uptrend, and I get it. We've made a huge run. You want to know where the top is. We don't get into that. We don't call tops. We don't catch falling knives, right? There's been too many times that, a decade ago we were trying that, right? But that we've learned our lesson from 10 years ago. That makes us not want to go back to it, right? There's no reason to do it. So, until something triggers on a higher time frame, there's no reason for us to say, oh, we're going to get a 20% pullback here, right? Today we had a nice pullback. It was very quick, very fast, and who's to say we don't just continue to move up, right? So that's just the way we trade over here. We need to wait for something to trigger, and just by the way that we trade, by default, we're never going to catch tops or bottoms, right? I don't want to say never. It's not as often we're going to catch the very top or very bottom. Now we may catch a majority of the move. Because we still get that early entry because, we know what our triggers are, but we have to wait for those triggers to trigger. We don't just say, we've dropped 20%. Let's go ahead and get calls now. We should start going back up. That's just not how it works. So, again, we just set these triggers and targets and stay true to our methodology here. Right. So let's continue going. I'm off my soapbox now. On the week, again, we're fine. We had pulled back into previous week's price action, but we pushed back up by the end of the day. Just got to see where it goes. Again, even if we pull back on the week, we could come all the way down. We've got the soft higher low here at 41, and we've got a solid higher low here at 35. A lot of room to pull back for a higher low. On the month, right, we're still fine. November is the higher low. We've made the higher high. We've got the uptrend going on the month. Again, high time frame, I've made it very clear what our position is here. Now, one thing I will say about the quarter and the year, looking at the quarter here, we've run the STRAT reversal, right? It's this one combo 2 down, combo 2 up. It's reached magnitude, right? So that's done. There's no more STRAT reversal that we're in per se, right? Like at this point, we've got all-time high as a level to look to the left, but other than that, we're starting to get into our extended targets. So just keep that in mind. That doesn't mean price has to pull back, right? We can just keep going, but just keep that in mind. That the strat has run for the quarter and the year, so a pullback is perfectly reasonable, right? Here's the year. We had the 2 down. We triggered the 2 up. We reached the high of the candle to the left of the 2 down. All is good, right? So that's what we've got from looking at today, intraday, all the way up through the year chart. Let's look at the market makers expected move for Friday, January 30th. To do that, let's get this out here. Oops. Let's get this stuff out here. Let's go to our options chain. And this is just think or swim. If we look at the options chain, we go to the expiration of January 30th, which is Friday, tomorrow. We can see that the We've got a number here in parentheses, plus or minus 4.393. That is the market maker's expected move. They expect a plus or minus $4.39 move, essentially. Now, this is done by looking at a strangle on the options chain at the money. It's easy to calculate, but easier to just come over here and look at it. So $4.93 is the expected move. We go over here to our notes, right? This was for Friday, January 30th. 232 trading days left in 2026 on Friday. Close price on Thursday was 70.47, and we know that the week, month, quarter, and year are green. It would take having to go below these levels to flip those red, right? We know the expected move for the week was plus or minus $7.35, giving us a range of 68.90, expected range of 68.95 to 54.25. Obviously, we broke out of that range, right? The expected move is right about 70% of the time, but it's not an end-all be-all level. You can go above the level or below, depending on, on the lower side of the equation. But here we have 4.39. So I thought I made a mistake there. But for Friday, we've got here plus or minus $4.39, which gives us an expected move of 74.86 to 66.08. Right, so that's where market makers expect price to stay within that range on Friday. Right, we know there's no gaps above. We closed one of the gaps below, but we've got still got plenty of gaps below. But just in getting back to the market makers expected move, if we look at it, what it expects is that we should go 2 up tomorrow. Right, obviously the market makers expected move low is down here at 66.08, but previous low a day is down here at 62.22. 62.65. I'm sorry, 62.65 is the previous low a day. So if we were to stay within the market maker's expected move range, that would mean we would stay either inside or go 2 up, seeing how the high is 74.86. The expected high is 74.86, and Thursday's high was 71.98. So that's what the market makers expect. Makes sense. We're getting up here into these this daily broadening formation here, this orange one, this hourly broadening formation, this weekly broadening formation. We've got the 250 fib extension here of the April 7th bull flag right here, that line. So that makes sense that market makers expect that things should slow down around there. But it would imply that we are going to go 2 up on the day tomorrow. Let's go to the 5-minute chart, and let's just talk about how we'll approach things for tomorrow's trading day using our proven and repeatable strategy, which once again, we look for higher lows at or above opening print to get into calls, and we look for lower highs at or below opening print to get into puts. Now, let's take the overnight low. Let's see, 69.31. We'll just say we come down to here overnight, right? That was a good level of support during the day, and let's say overnight high stays around like previous high day, right? So that's our range for overnight price action. We've got our 4-hour markers on the board, right? So we've got previous high a day up here, got overnight high, overnight low, and previous low a day, right? Honorable mention levels, obviously, are market makers expected move low for the day. Day indicators are always in orange. Market makers expected move high for the week. Week indicators are always in purple. And then again, up here, we've got the market makers expected move high as well. So let's just talk about at open, right? Once we, the last level that we can put on the chart is the opening print. And let's just say we open somewhere in the middle of the overnight price action. Well, the proven strategy is take this opening print. If we get price action to the upside, maybe we get a rejection off overnight high and we pull back, but we get some type of higher low at or above this opening print level, and we start to go back up. You want to get into calls, and the first target is going to be overnight high. Obviously, not a lot of magnitude there, so I wouldn't be mad at you if you didn't let them go there. And then previous high a day is going to be your ultimate target for that quick move, right? So that's a way you can get in on a quick scalp. Or if we reach this previous high day and continue with momentum, that's how we can be an early entry into a longer day trade, right? So we'll go to our 4-hour and 1 day triggers and targets here in a second, but we're just keeping in with the early entries on scalps or an early day trade. We want to look for higher lows at or above opening print to get into calls. At the same time, if we open and we push down, maybe we bounce off an overnight low and push back up and reject off a market makers expect to move higher, even off an opening print and get that lower high. And we want to look to get into puts, targeting overnight low first, and then ultimately, there we go. I don't know why it was off of there. Ultimately, previous low a day would be the final target for the move based off of the strategy of the 4-hour markers, right? So very simple. Higher lows at or above opening print, get into calls. Lower highs at or below opening print, get into puts. If we go out here, let's go to the 4-hour time frame here, time chart here, and let's look at things from more of a full day trade perspective, maybe even overnight swing, right? If we look at Thursday's price action, it was a red 3 or a bearish engulfing candle followed by a green 1. So we talked about this early on in the week. 3-1 to us is big indecision, little indecision, right? 2 up is a decisive candle, right? 2 up is we went up. 3 or a bearish an engulfing candle, okay, we went above and we went below, so we couldn't make up our mind. A 1, we didn't go above or below, so we couldn't decide either. So again, just a day of indecision with high volatility, essentially. Volatility all in the morning and consolidated in the afternoon. So again, nothing totally bearish about this. Now, if we do go to the downside, that gives us a 3-1-2 down reversal. Obviously, a good amount of magnitude there, right? We enter at the low of the 1, and the exit is at the low of the 3, right? So the low of the 1 is 68.12, low of the 3 is 62.85. It's about $5 of price action for you there. We want to keep in mind last week's 50%, last week's high, 66.96, and the market maker's expected move low is 66.08. So, watch for any type of bounce there. I would say 65.04 would probably be the line in the sand. That's where it was some resistance. Again, obviously, it's the 200 fib extension of the April 7th bull flag, and you can see how it was, a level of inflection over the past week or so as well. So, to the downside, if you do go past that, obviously we should reach magnitude for that move, and then that puts us smack at the top of another gap, right? So could we dip on into the gap? Very possibly, right? But that is a very big move, so don't just totally expect a gap move off of that push downwards. Just don't get too far ahead of your skis, right? That's all I'm saying. To the upside, we get this 3-1-2 up, entry at the high of the 1, exit at the high of the 2. But obviously, we're in an uptrend, so you don't need to exit the full position. We got broadening formations and things showing that we should continue to go higher. Market makers expected to move high up here as well. So again, continue to just watch. We'll have some extended targets for you here in our notes when we get there in a second. Let's take a look at the day chart before we get to our notes, and we can see. Let's get that on a cleaner chart. There we go. We can see that, whoa, what are those price levels here? Let me move that. There we go. We can see, obviously, we have that bullish engulfing candle or green 3 on the day, right? Big wick on the bottom, but essentially an indecisive candle. It's a doji, but if we do get price to the upside, we've got this extension of the uptrend. Remember, keep in mind, we've got these broadening formations up here. If we get a good push early in the morning, may expect it to just taper off in the afternoon, possibly even pull back. To the downside, before we even trigger the downside, we've got a long ways to go. So again, don't get too far over your skis. However, if we do get below that, that triggers this combo 2 up, combo 2 down, and the magnitude for that move is down here at 59.60. So still a little bit of magnitude on that move for you, right? 62 to 59, 50, 60-ish. It's not too bad if you're going to wait for the day to trigger instead of taking a trigger on like the 4-hour or 1 hour or something like that, right? Let's go ahead and go to our notes so we can just kind of look at the numbers here. We've looked at a lot of charts. Again, we know our gaps below are right? And then on the scalping perspective, we know higher lows at or above opening print, we want to get calls. Lower highs at or below opening print, we want to get into puts. We just talked about on the 4-hour chart. If we do go to the upside, to the downside, that gives us a 3-1-2 down, triggering at 61.12. 68.12, magnitude of 62.65. We do have, I don't know why I put my targets after the magnitude, because they obviously come before them. So let's adjust that here. Targets are 66.96 and 65.04 on our way down to that 62.65. Again, we are in an uptrend on the 4 hours, so just keep those in mind. Those are possible places where we could bounce. To the upside, we would get a 3-1-2 up, triggering at 70.50, magnitude being 71.98. So not as much magnitude on the top as there is the bottom, but still definitely enough to play with SOXL, especially if you're at the money, in the money, multiple contracts. Should see decent profit if we were to make that move, complete the strat. And if we do, we have some extended targets out here if we really get running. But those kind of pull us into the day, triggers and targets on the day. Remember, we did have that bullish engulfing candle, barely closing green on the day, but still closing green. So if we do go to the downside, again, remember, we got to get all the way down to that 62.65 to trigger that 2 down. But we do have some targets listed out here because obviously it's not a strat, it's just a continuation, and no magnitudes for those. So just extended targets. Same to the upside, 3-2 up. Not as far to go to trigger that though. 71.98 is the trigger, and we've got our extended targets here. All right, looking at the week and above, we've already triggered the 2 up, right, at 66.96. We reached a couple of targets, and we've got a couple of more out there. We did again close above 70.47, so we're still in for. Close above 66.96, so we're still in force with the 2 up. We're just things looking still good. On the month, 2-1-2 up. We triggered and reached magnitude, and we're just pressing on further. 1 combo, 2 down, combo 2 up on the quarter, like we talked about earlier. It's already reached magnitude as well, so we're just looking towards like all-time high and extended targets there. And the same with the day. The year. We got that 2 down, 2 up reversal. We reached magnitude, and we're just looking at all-time high and extended targets from there. All right, so there you have it. Those are your triggers and targets for everything from the scalping perspective all the way up through the 1-year chart. Really tried to jam in as much information as possible without taking up too much of your time. So we hope everybody enjoyed this video. If you made it this far, it really gives us, helps out the channel, I should say, if we get a thumbs up, right? It's a free channel. We don't ask for any membership fees or anything like that. We just try and give it out as much information as possible, give people the best chance of getting better at trading, right? Because again, this strategy can be used with any ticker, not just SOXL. So if you made it this far, we appreciate a thumbs up. Feel free to leave a comment if you want. If you think we need to touch on something that we're not touching on, if you think we're staying too long on a particular subject throughout the video, definitely let us know. We've made little tweaks to the video per people's request, as we've gone on through time. So, definitely open to those, and any constructive criticism or anything like that. We do like having the conversations in the comment section with you guys. So, we do hope you enjoyed today's video. We'll go ahead and end it at this point like we normally do. If you're watching this Thursday night, we hope you get some good rest tonight and wake up refreshed tomorrow. If you're watching this Friday morning or Friday during the day, we hope you got some good rest last night and woke up refreshed this morning. And we look forward to getting out there and trading with you.